Silver just cracked a ceiling that has held it down since a man walked on the moon was still recent news. Not a headline, not a week. A whole generation of savers came and went underneath it, and it never gave way. Until now. So let me pay off the title before I do anything else, because you click for a reason and I am not going to make you wait for it. The biggest level in silver is not a price on a chart. It is the roof that silver has been trapped beneath for longer than almost any market on Earth has been trapped beneath anything. And when a market finally punches through a lid that old, after that many years of coiling, history says the move that follows tends to be far bigger than anyone standing at the breakout expects. That is the real story here. Not a number, a structure. And it just broke. Now let me be honest with you right up front, the way I would want someone to be honest with me, because that honesty is the whole reason to keep listening. This is a case, not a guarantee, and it is not personal financial advice. I cannot tell you the day, the week, or the exact size of what comes next. Anyone who tells you they can is selling you something. What I can do is show you the setup, tell you plainly what these setups have done before, name the people who profit from you never understanding it, and let you decide for yourself. That is the deal. Fair. Here is the fact I want you to sit with, and it costs nothing to verify. Silver has now touched roughly the same overhead ceiling twice in the last several decades, more than 30 years apart, and both times it got slapped back down. Think about how strange that is. Almost every other asset you can name has gone up many times over across that same span. Homes, stocks, the cost of a loaf of bread. Silver sat there, pinned, tracing the same line again and again like a prisoner testing the same locked door. That is not a normal chart. That is the single longest base in any major market, and I have watched a lot of charts in my years in the gold and silver world. I have never seen a cage quite like this one. And when you adjust that old peak for what a dollar was actually worth back then, the picture gets almost absurd. In real terms, in true purchasing power, silver has never once come close to reclaiming what it was worth at the top of that old run. Not close. So even now, even after the move that put the number in your title, you are not looking at something that ran away and got expensive. You are looking at something that spent nearly half a century getting cheaper in the only terms that matter, and is only now beginning to remember what it is. So why did the lid hold so long? This is where you meet the enemy of this story, and once you see it, you cannot unsee it. There is a whole machine built around keeping metal like this quiet. Big banks with enormous trading desks. Financial media that will put a talking head in front of you to explain why gold and silver are relics, barbarous, for cranks and preppers. And a paper market where far more ounces trade on screens than could ever be delivered from a vault. When something trades mostly as paper, its price can be managed, leaned on, walked back down, in a way that a truly scarce physical thing cannot be forever. For a very long time, that machine worked. The lid held because a lot of powerful people needed it to hold. Let me give you the mechanic of how they do it, because this is the part they would rather you never learned. There is a lever called margin, the money a trader must put up to hold a position. Raise that requirement suddenly and hard enough, and you can force a wave of selling that has nothing to do with whether silver is scarce or precious or in demand. It is purely financial, and it has happened. The last time silver charged at this exact ceiling, the requirements to trade it were hiked again and again in rapid succession, and the price dropped by roughly a third in a matter of days, while not one single thing about the actual metal in the actual ground had changed. Nothing fundamental moved. Only the leash got yanked. If you were holding that week, your stomach was in your throat, and the people who yanked the leash made money on your fear. That is not a theory. That is the business model. Now, I want to talk to you directly for a moment, because if you own silver right now, or gold, or you are sitting on a retirement account wondering whether you have done enough to protect it, this next part is for you specifically. Every time this metal has surged toward that old ceiling, the same thing happens to ordinary savers. They get shaken out at exactly the wrong moment. A sharp drop, engineered by people with deep pockets, scares them into selling the very thing they should have been holding, and they hand it, cheap, to the smartest money on earth. I have watched this exact setup play out more than once, and it breaks my heart every time, because the people it hurts are almost always the ones who did everything right and just got frightened at the bottom. And that is exactly the right place to stop and tell you how to make sure a shakeout can never do that to you. Here is something the financial channels will not lead with because it does not sell their advertising. The central banks, the biggest and best informed buyers of precious metals on the planet, have been buying gold at a record pace, more than 1,000 tons a year, 3 years running, roughly double what they bought in the decade before. They are not doing that for fun. They are protecting themselves from the very system they helped build. And here's the part almost nobody tells the ordinary retiree. There is a perfectly legal, established way for you to do the same thing they are doing. You can move a portion of the retirement savings you already have, your existing 401k or IRA, into physical gold and silver, held for you, without triggering taxes and without penalties, using something called a self-directed precious metals IRA. Most people have simply never been told it exists. We put together a free guide that walks you through exactly how it works. If you are watching this on your television, just scan the QR code on your screen. If you are on your phone or your computer, go to jeffreedguide.com. And this is not just for insiders. If you have $100,000 or more in any retirement account, this is for you. Take a look, then come right back, because the next part is where this whole thing gets strange. Here is where it gets strange. A base this long, this old, this coiled, is not just a curiosity, it is a loaded spring. Think of a market as coiling energy the entire time it stays trapped. Every year silver spent pinned beneath that ceiling was another year of pressure building, another wave of buyers absorbed, another wave of doubters convinced it would never move. And here is the thing about a very long base that traders who have lived through a few of them will tell you quietly. The longer the base, the bigger the move when it finally breaks. It is almost a law. Small bases give small breakouts. A base measured in decades, the longest in any major market, does not give you a polite little rally. When that kind of structure lets go, it tends to move with a violence that leaves the people who were sure it was dead standing there in disbelief. I have seen this movie before, and here is how it tends to go. The break itself is never clean and never comfortable. It comes with fake-outs, sharp reversals, days that make you feel like a fool for believing. The machine does not surrender the lid quietly. It throws everything it has at pushing the price back under, because a confirmed breakout from a base this size is precisely what a lot of powerful desks have spent a career betting against. So the early part of a real breakout feels like chaos, not triumph. That is normal. That is what the top of a decades-long cage looks like when the door finally gives. And let me hand you the concrete reason this break has real teeth underneath it, because a chart pattern alone would not be enough for me, and it should not be enough for you. Silver is not just a shiny thing people hoard. It is a critical industrial metal. It goes into solar panels, into semiconductors, into electric vehicles, into medical devices, into 1,000 things the modern world cannot function without. And unlike gold, which mostly gets hoarded and sits in vaults forever, industrial silver gets used up, scattered in tiny amounts across countless devices, much of it never economically worth recovering. Gold is hoarded. Silver is burned. And for several years running now, the world has consumed more silver than it has produced, a structural deficit driven by that relentless industrial demand, drawing down the above-ground stockpiles that quietly covered the gap for years. That shortage does not care what the screen printed this morning. It is a slow, grinding, physical fact underneath the whole thing. Now here is the tell that ties it all together, the one the mainstream keeps missing. Through much of this recent stretch, silver has actually lagged behind gold. Gold has been pressing up near its record highs while silver, for a while, dragged its feet. And the ratio between them, how many ounces of silver it takes to buy 1 ounce of gold, stretched out toward the wide end of its historical range. Now, most people hear that and think silver is the weakling. Read it the other way. When that ratio gets that stretched, it has historically meant silver is deeply cheap relative to gold, coiled to catch up. And catch up is what silver does. It is the one that sits still, and then moves in a rush that leaves gold behind. A wide ratio is not weakness. It is a loaded question waiting to be answered. Let me put a human face on this, because charts do not knot your stomach, but people do. Picture a man who has quietly held silver for years. Not a gambler. A careful person, the kind who reads, who does his own thinking, who got tired of being told by cheerful people on television that the metal in his safe was a foolish thing to own. He watched it get slapped down at that ceiling before. He watched the margin games, watched the paper pile up, watched the media laugh it off. And more than once he nearly gave up and sold, because holding something the whole world calls dead for that many years wears a person down. If that is you, if you have felt foolish holding, if your stomach knots every time you check the number, I understand that feeling completely. And I want you to understand what that long, lonely wait actually was. It was not you being wrong. It was the base. It was the coil. It was the price of being early. Because let me now name the deeper force, the one that outlasts any single margin hike, or any one trading desk. A metal like this has exactly one true enemy, and it is not the banks, and it is not the media. It is a real return on safe money. When you can earn a genuine, inflation-beating yield sitting in cash, gold, and silver struggle, because they pay you nothing but their own scarcity. There was a period, decades back, when a determined central banker drove interest rates high enough to deliver exactly that real return, and it broke precious metals for years. That is the honest bare case, and I will never hide it from you. But look at where we actually are. Look at a Federal Reserve under a new chair, Kevin Warsh, that just made a divided decision, a house split against itself, deliberately giving markets fewer clear signals than they are used to. Look at debts so large that truly punishing, sustained real yields have become very hard to deliver without breaking something else. The one weapon that ever reliably beat this metal is the hardest weapon in the world to swing right now. That is not a small detail. That is the whole floor under the case. And there is something else the old inverse rules are not catching. For a long time, the textbook said gold and silver should fall whenever real yields rise. Lately, that relationship has quietly broken. The metal has climbed even in the face of conditions that, by the old rulebook, should have buried it. When a decades-old correlation stops working, it is usually because something structural has shifted underneath the market, something the models have not priced in yet. The people running those models will be the last to admit it. You do not have to wait for their permission. So let me be plain about what I do not know, because that honesty is worth more to you than any confident promise. I do not know the day this fully catches fire. I am not going to insult you by pretending I do. The brake could be tested, retested, shoved back below the line one more time before it holds for good. Corrections in a young bull market can be brutal and can last longer than feels reasonable. Anyone who guarantees you a straight line up is not being straight with you. What I am telling you is not a prediction of a day. It is a reading of the structure, and the structure is the most compelling I have seen in a very long time. Which brings me to the part that actually matters, the recognition moment. And I want you to really hear this. The smartest money already sees this. The central banks buying at a record pace already see it. The patient holders who lived through the whole long base already see it. What has not happened yet is the moment it becomes obvious to everyone. The moment it leads every news segment, and every cheerful advisor who called it a relic suddenly recommends it. We are not in that moment yet, and that is precisely why this matters now. Because by the time it is obvious, by the time your neighbor is talking about it at the mailbox, the easy part will already be behind us. Nobody sends you an invitation to be early. There is no phone call. The whole point is to understand it before the crowd arrives, not after. So here is the honest, practical way to think about what you own. And it is not a prescription, just principles I would give a friend at my own kitchen table. Own the real metal, not a paper promise that someone else can fail to deliver. Size your position so that no shakeout, no margin game, no ugly week can ever force you to sell at the bottom. Because forced selling into a shakeout is the single most expensive mistake this audience makes. And never, ever hand your metal cheap to the very people who engineered the fear. Hold it because you understand why you hold it. That understanding is the thing they cannot take from you. And that is why I want to make you an honest offer as we close. For those of you with $100,000 or more in a retirement account who have watched this all the way through, we hold a free, no-obligation, one-on-one educational web conference where we walk through exactly how retirees are protecting what they have built, how the physical metals IRA actually works, and whether it even makes sense for your situation. There is no pressure and nothing to buy. Just mention that you watch this full video. If you are on your television, scan the QR code on your screen right now. If you are on your phone or your computer, go to jeffreedguide.com. And here is the honest why now, with no fake urgency attached. The window where a decision like this is still cheap, still calm, still fully reversible, is exactly the window when nothing feels urgent at all. That window is right now, while the crowd still calls this metal dead. Once it does not feel calm anymore, the easy part is already gone. So come back to where we started. A ceiling that held for longer than almost any market has ever held anything. Through a generation of savers who were told to look away, finally cracked. That careful man in the story did not get rich because he was smart. He got there because he understood the cage he was standing in, and he refused to let them scale him out of it 1 week before the door gave way. You do not have to know the day. You just have to understand the structure, size it so you can hold it, and refuse to be the one who hands it away cheap. The lid is off. The only real question left is whether you understand what that means before everyone else figures it out. And now, I think you do.